Do you know that property behaves differently in new launch and resale market? Watch this video and find out more. Hi everyone, welcome back to Property Titus. In today's episode, we will be applying the Art of War by Sun Tzu into real estate. For this episode, we will be focusing on new launches, which is understanding developers' pricing strategy. So let's jump right in. It is important to know that developers usually stick by their pricing strategy throughout several of their projects. And typically, there are two main strategies that are used by developers. Imagine this, you're buying into a new launch that looks promising. It's in a good location, there's fantastic amenities, the units are selling fast. Everything seems to be positive. But here's the catch, developers' pricing strategy can play a major part in determining what is a good deal for you. Some developers price their unit low, and as inventory runs out, they increase the price. Some developers set the premium right from the start. The higher you get, the better facing you get, the more premium you pay. This strategy might sound minor, but they do have huge impact on your resale profits. Without understanding how this strategy works, you might overpay for your unit and it will affect your resale profit in the future. Let's break down these two common strategies to help you avoid overpaying. For the first strategy, starting low and ending high, we want to look at Treasures at Tampines by Simlian. This is a massive project with 2,200 over units. On launch day, developer only managed to sell 200 over units, around 15% of the 2,000 over units. In this instance, let me ask you, if you are the developer, will you be panicking? So it makes perfect sense not to increase the price. In fact, what we can see is the price stays stable until around 60% of the units have been sold. We call this phase 1. And once 60% has been hit, feeling slightly confident, in phase 2, we can see that the price starts to increase gradually. And lastly, in phase 3, when inventory is low, developer goes all out and increase the price, as you can see from the chart in phase 3. So how does this affect the buyer? Buyers in phase 1 and 2, we can see the resale profit ranges from 230,000 to 300,000. Whereas buyers in phase 3, we can see that their resale profit is 100 over 1,000. So why is there a differential in terms of the resale profit? We can see that in phase 1, buyers went in at around 1,300 per square feet, total quantum around 800,000. Whereas in phase 3, the buyer went in at 1,700 per square feet, almost 1.2 million in terms of purchase price, the differential of around 300 over 1,000. And this 300 over 1,000 essentially is the cost of having a smaller resale profit for the phase 3 buyers. So the question is, do we want to be a phase 1 buyer or a phase 3 buyer? For the same size unit, do we want to be paying 1,300 per square feet, or do we want to be paying 1,700 per square feet? So the number 2 strategy that we are looking at today is premium pricing right from the start. These developers typically do not increase price as much as the previous strategy. The price increase might be gradual. However, they price in the premium right at the start. What do I mean by this? Let's take a look at Avenue South, a high-rise residence of 50 over stories. From the start, pricing has been set based on the floor level. The lower level, we will call it phase 1, the middle level, phase 2, and the highest level, phase 3. The lower levels, the green zone, we can see prices start from 1,800 to 1,900 per square feet, and resale profit ranges from 2 to 300,000. The middle floor, which is the yellow zone, transacted at 2,000 per square feet to 2,100 per square feet, and resale profits were lower at 100 to 200,000. And the highest floor, which is the red zone, phase 3, transacted at 2,003 to 2,004 per square feet, and we can see that profits significantly dipped to around 80,000 to 150,000, despite being the premium units. An interesting trend emerged here. The premium facing units or the premium floor units in the new launch, this premium might not translate over to the resale market. Right now, let's take a quick look into other examples of how pricing strategy of developer affects resale profit. First one, Seaside Residence. Both transacted 2017 April-May period. The level 1 unit bought in at 1,006 per square feet. The level 20 unit bought in at 1,009 per square feet. a difference of $300 per square feet. But the level 1 unit made a resale profit of $107,000 more than the level 20 unit. Number 2, Copa and Newton. All these transactions happened April to July 2020. Again, similar observation, level 4 and level 5 unit transacted at 2003 per square feet, whereas level 12 and level 15 transacted at 2005 per square feet, a difference of $200 over per square feet. How about resale profits? The lower units on level 4 and 5 make 100 over thousand more than the higher units. Third example, Principal Garden. The first transaction happened in October 2015 before the price will increase. It transacted at 1,500 per square feet, and 2 years later in September 2017, the developer raised the price as per Treasures at Tampines, and it transacted at 1,700 per square feet. We can see both units resale at around 1.5 to 1.6 million. However, the buyer that bought in 2015 made 200,000 more than the buyer who bought in 2017, simply because the buyer bought earlier and at a lower entry price of 1,500 per square feet. Alright, last example, the Clement Canopy in Clementi. We can see that in earlier part of 2017, the buyers that bought in at $1,300 per square feet as compared to those who bought in later part of 2017, early 2018, they paid $1,700 per square feet for the same unit of 657 square feet. That's a difference of $350 per square feet, which resulted the earlier buyers making 160 over thousand more than the later buyers. So now we understand the two common pricing strategy that developer uses. You might be wondering, Titus, are there still opportunities in the market today? For sure there is. So let's take a look at Sora now. Stack 23 level 2 is going for $2,100 per square feet, whereas same Stack 23, same size, level 19 is going for $2,600 per square feet, a difference of $500 per square feet. An absolute pricing difference of 350,000. This 350,000 means per floor increment for the difference of 17th floor is 20,000 per story. Remember the example previously in Avenue South, whereby the unit on level 4 and on level 32 transacted both at 1.7 million. With that as the context, now my question is, will you rather buy the level 2 unit in Sora or the level 19 unit? Will you be willing to pay 350,000 more? Will you be willing to pay 20,000 per floor? I think you get my point that I'm trying to share, that it's important to understand how developers price their project, whether they go by the first strategy of increasing price or second strategy, pricing the premium according to the level, the floors. By understanding this strategy, I hope I can help you make a smarter decision, whether is it buying earlier, buying lower floors, or many other factors to consider to know how we can enter into your choice unit at the right entry price to avoid overpaying. Alright guys, if you find this insight useful, please do continue to like, share and subscribe. Follow me on my socials. In the next episode, I'll be touching about how we can apply the art of war to resale transaction. Thank you for watching, and I'll see you in the next video, and as always, God bless.